Hello everyone, Okane here. This is going to be the first video in a series of about 4 or 5 videos that I'm going to share about price action. I call it Okane's price action because this is how I read the charts, and price action is different from trader to trader. If you haven't seen my post yet, please take a look at it. It's in the forums, the strategy thread. It's about learning price action. I have explained a little bit about what I'm going to talk about in these series, so check it out. I also strongly recommend that you only study one asset at a time. If you want to become a good trader, just focus on one asset. You're not gonna become profitable, make good trades if your mind is busy analyzing 10 assets at the same time. Most pro traders do only 2 or 3. So that's up to you, but I suggest you only take a look at one asset if you want to learn, because there are things that you only see when you really focus and you really take a look at the charts instead of just the indicators. So the first lesson is going to be about trends, and then in the upcoming videos we will just build on, we add more stuff, and then in the last video we put everything together. So that will be the price action strategy. But the first video, as I said, it's about trends. Now I usually do 10-minute expiries, but it doesn't matter. I still analyze as many time frames as possible. So the first thing that I do when I open MetaTrader 4, or my charts, whatever the charts is that you prefer, I look at a higher time frame. So we can start with the monthly chart. Now here you can see that the trend is strongly bearish, but there are trends within a trend, because if you trade short expiries like me, you want to take advantage of as many retracements as possible. So the monthly chart might indicate that the trend is bearish, but if you look at the hourly time frame, you see it's an upgoing, very strong bullish trend actually. So it all depends on how you look at the charts and what you're looking for. Now we can keep scrolling down to the weekly. You can see the candles here coming up, touching this line here that I drew earlier. You can see how many times, about 4 times, and this indicates that this is a strong resistance. So I put my line there. Now I can scroll down to the daily charts. Again, you can see, notice how price dropped here and it touched this line several times. So now we know, looking at the higher time frames, we know the trend is bearish, but we can also see that the price has been moving up for the past week or 2. So this is how you take a look at the trend. You know the major trend is going down, but there is a small retracement coming. So let's scroll down. This is the 4-hour time frame. You see the price has been there before. Okay, so now we know that this is how you analyze every time frame. Now we want to add something so we can see the trend better. Now you can start with a moving average, set it to a 200 exponential, and I also like having another moving average. You can set it to another color, and period 99 is good because it resembles SMA 50. That's the same thing as in EMA 99. So you can try that if you want, just so you can see they overlap. You see, you don't see it here because it's overlapping the moving average. So if we delete it, there is the other moving average. Okay, so now on the monthly time frame, price is below the moving averages. On the weekly, still below, so it's a bearish trend. On the daily, still a downtrend. Now after the daily, when we go to lower time frames, you can see that it's starting to look like an uptrend. So what you want to look for is your own setup, your own strategy. What expiries do you like to trade? Now for me, it's a 10-minute expiry means that I can take trades inside these retracements, so I don't have to wait for a higher low here, and like this one, I don't have to wait months for a higher low. I can take trades on the hourly, based on the hourly or 15-minute chart. Okay, so when the candles create higher lows above these EMAs, it's simple. It's an upgoing trend. So you have to also ask yourself, where is price going? Now in this case, we already know because we were smart. We looked at the daily charts and the weekly charts, and we knew there is a very strong resistance here. So we expect the price to retrace here, make a higher low, because this low is higher. This high is lower than the others, so it's the price is making a lower high. We can expect it to touch this line, but we're not sure. You can never be 100% sure. You just can expect it to happen again because it happened before. That's just how it is. Probabilities. As you can see, I've also posted about this a day before on my Google Plus that USD is still rising. Keep an eye out for this level here. As you can see, it's really close now. I'm not sure if it's gonna touch today or tomorrow or this month, but that's just a probability, a high probability. So when you look at the trends, you know, so you can approach this in two ways. Now you know that price is going up. You expect it to go up. So you either trade with this retracement, taking call options at higher lows, or you wait for the retracement to get over here, touch this strong resistance line, and then you take a trade. So that's up to you how you approach it. It depends on your expiry, it depends on the patterns you see on the chart, the setups that you find. What I would like to do right now is to wait for this, because it's so close. I would like to wait for this candle to touch before I short it. I take a put option. Now it might continue after that, but we know there are lots of sellers in the market, as you can see from history, how price reacted when it got up here. So that's how you analyze the trend. You know the major trend is bearish in this case, and you know this is a possible retracement making a lower high. And you can take advantage of this by going to the lower time frames. You see that yes, there is in fact a retracement happening because the candles are moving up, making higher lows, and they're above the EMA. So you can, as I said, take advantage of this, trade these higher lows until you reach up to the to this level. And then after that, you have to reanalyze the situation. What is going to happen? Is it going to continue up, or will this line hold and price will continue dropping again? We don't know that. We can only speculate by looking at the charts and analyze it as best as we can. So that's how you spot the trends. It's really easy. All you have to look for is either lower highs or higher lows. And as you can see, it tells you different things. On the daily, you see a major downtrend. On the hourly, you see a major bullish trend. So how you use it is up to you. But you analyze all the charts because you want to have as much data as possible. You want to know exactly what's going on in the market. So that's a really important question. You have to ask yourself, where is price trying to, which level is price trying to reach? Where is it going? What is it aiming for? And when it gets there, is it going to retrace? Well, yes, possibly in this case, because you can see history here. These candles are again daily and weekly, so they are very strong. It means this line is strong. It is much stronger than a line drawn on the 1 minute or 5 minute or 15-minute chart, for example. So that's for the trend. In the next video, we can take a look at how we can draw support and resistance lines and adjust them with the help of our EMAs. So stay tuned. I'll see you later.